Hello traders, this is the results so far after 76 trades of my super simple top gainers trading plan. The concept behind this trading plan was, what if we could come up with a very simple plan that's easy to follow, and as long as you stay disciplined, I mean 100% of the time, which I have developed the capability of doing, then is it going to be profitable? So basically the edge with this trading plan is trading discipline. If you have the trading discipline, can you be profitable with a super simple trading plan? And that's what this thing was all about testing. So we are 76 trades in at this point. We want to take 100 trades, so we still have 24 more trades to go. The results are pretty interesting so far. We were quite profitable with this trading plan at the beginning, and I'll show you where we were at that point and where we are now. The interesting thing is that we haven't changed anything as far as how we trade or the rules or kind of the parameters of the trading plan. We've done the same thing since day one, but we've seen a huge change in the P&L. So that is just kind of showing you the statistical results of this trading plan over time. And that's an important point that a lot of new traders miss, is they think that if they trade a plan for 5 or 10 or maybe even 20 trades and find out it is profitable, it isn't profitable, it's break even, that is really what that trading plan is capable of. And that just simply isn't the case. You really need to take 100 trades or more. And that means over a period of time. If you just take 100 trades in one day, just getting in and out on a particular stock, that's not really going to be effective either. But anyway, we started this thing back in July 29th of 2022, and right now we are on trade number 76. Again, trading the exact same criteria every day, a maximum number of trades of 3 trades every day. And let's go over the results. So on this column here, we're just keeping track of the trade number. So as I said, we are now at trade number 76, or we've completed trade number 76. We started this out with a $600 account allowance. So I'm just fractioning out a percentage of my account for testing this trading plan. And this $600 is significant because we wanted to trade with about $100 per trade, and I want to take up to 3 trades per day. So that means I need $300 per day. And with a cash account, which is what you should be trading with if you're a new trader, it takes 2 days for your funds to settle. So that means that if you want to trade 3 trades per day, $100 per trade, you're going to need $600 available of cash in your account at the outset. That's without taking any trades. So anyway, then we're just tracking our P&L per trade here, percent change per trade. The ticker symbols are in this column, our entry, our exit price, our number of shares, which you can see the number of shares changes wildly because we are trading a percentage of the account. And that's kind of a trick in order to keep the risk relatively the same on every trade. So then we have our commissions, which are 0 because we're trading with Webull, SEC fees, and FINRA fees. Our risk, we're just tracking the risk per trade because, as I said, we want to keep the relative risk the same, but you can see that there is a fluctuation there, but over time it's going to average out, and our average right now is 366 per trade. If you've been watching these recaps, you know that that has stayed pretty stable for quite a long time now. So that's what I mean by over time it's going to average out. Our trading P&L, which did peak around $54, $55. Sorry, this is on each trade. And our total P&L, which peaked around $55 right here, trade number 22. And then ever since then, we've been heading down with some kind of pullbacks to the upside. This tracks every single trade, so you could see quite a bit of fluctuation throughout the day. For example, if we lost 2 trades and then the 3rd trade works out, then we get a nice bump back up. But basically, we've been bleeding out on this trading plan ever since then, and I'm okay with that because I want to take this thing to 100 trades no matter what. Otherwise, I don't really know if this thing works or not. Believe it or not, there is still a chance that this could be profitable because there's enough trades left. We only need about 25 winning trades, maybe 26, to be profitable with this trading plan because the risk to reward ratio, we're trading 3 to 1 all or nothing, and right now our overall win rate is 19.74%. We've won 15 trades out of 76 trades. If we get to 25 out of 100, then we could we could still consider using this trading plan. I honestly don't think that's going to happen. That is a long shot, but we won't know until we take the 100 trades. And all of this, there's an underlying theme here of trader discipline. We set out at the beginning to test this thing to 100 trades to find out whether it works or not. If I bail out early, I'm breaking my trader discipline, and that is going to be reflected in any future trading or any future test. We've done this sort of thing before with mid-cap, and we've done it with small caps, and we found the small cap trading plan to be profitable. We're also testing the SPXL day trading plan. That is also profitable. So this thing is unprofitable, but we're only finding that out because of the trading discipline that I've developed doing these tests numerous times, and I'm able to sustain it during this testing period. And we're getting good data because of that, and only because of that. If I bailed out, if I got scared because, hey, it's not working out right away, or it's not working out at all, or whatever, then we really don't know anything at the end of it. So okay, having said that, our overall win rate is below break even. Break even is 25%. We're at 19.74. Entry number 1 works out 16% of the time. Entry number 2, same thing, a little bit lower. I should have rounded up there. 17% and about 16% on entry number 2, and about 29% on entry number 3. So entry number 3 is profitable. The other 2 are not profitable. They just need to be above 25% to be profitable. We've lost about 10% of that $600 we started with. But again, that's after 76 trades. So after 76 trades, we're down 10%. I know traders that will blow up accounts in just a handful of trades. So again, I'm not saying like this is great, this is a great result or anything like that, but just showing you how you can test a trading plan that's could even be unprofitable. I mean, most of them are going to be unprofitable. It's not going to be easy to find a profitable trading plan. So far, I've found 2 that I've developed myself out of. This will be the 4th one that we've tested. So you can see it's not that easy. And the probability of a one and done day is about 17%. 2 in 1 day, about 13%. So that means that on the second trade, we won and we're done with the day. And probability of a 3 and done day, so meaning the third trade worked out, is 20%. And excuse me, the highest likelihood outcome that we have with this trading plan right now is a max loss day. We have a 40% chance of having a max loss day. Sorry about the lightning in the background. And it's good to know that going into the day, because guess what? I don't get surprised when I have a max loss day. So that's the beauty of collecting all of these statistics. Obviously, we would prefer the max loss day to be on the lower end. But at least if you have some idea of what to expect when you go into the trading day, you're not going to be emotional, and you're not going to revenge trade, and you're not going to be shocked that, hey, this setup didn't work out or whatever. I'm going to go off on a little rant here, but excuse me. I've heard this so many times through other YouTube trading channels as, well, if you just take this entry, it has a 90% probability of working out, or even a 75% chance of working out. Yet no one ever shows you any statistics, any data they collected. They just pull that number out of thin air. Maybe they heard someone else say it. Maybe they read it in a book. Remember, you can publish anything you want in a book. We have something called freedom of speech, which is great, but it means that what's in a book is not necessarily a fact and doesn't need to be a fact. So just be careful what you take from videos, from a book. If it's a scientific study that has been peer reviewed, that's a little different. But if it's just in a book, if it's on a video, people can say anything they want and get away with it. So just kind of a little side note there about, just being careful about what you read and what you see and how you go about it. So interesting note on the P&L curve. If I cover up the right side of it, you could see that, and again, this tracks every single trade, not just each day. So that's why it looks so wild. But if you see here, it's just an uptrend for that first, say, 30 trades or so, and then things just start to fade off. Again, we didn't change anything throughout this whole period about like what we're doing. This is just a reflection of the small cap market changing as we do the same thing. So, and if you're wondering about, well, you should adapt to the market and all that, I just find that incredibly unreliable and very vague. What does that mean, and how do you adapt to the market? If you come up with some set of rules, something that says, okay, well, the market has turned when this happens, maybe when the S&P, drops below a certain moving average, or it starts making new lows on the daily candles or something like that. If you have a well-defined reason that you can say, okay, the market has shifted and now I'm going to become short biased or something like that, that's one thing. As long as you have that stuff well-defined and you actually test it over a 100 trade period, then you might be able to say, okay, I can adapt to the market. But if you just try to just pull something out of thin air because you think the market is changing, or someone else says the market is changing, and now you think, well, maybe if I do this, this will work. Who knows what's going to happen, and you're not going to be able to stick with it because you don't have any data to back it up with. So that's kind of the whole point of collecting all this data. Now, another very important and interesting note is we are collecting data on multiple profit targets. And this week I discovered one error I was making in tracking these profit targets. And this is super important. So listen to this, because I'm sure a lot of other people are interested in this concept of tracking multiple profit targets to find out which one is most profitable. The reason why I'm doing it here is because when we tested our small cap trading plan, we only took the 2R profit target, but we tracked the 3R profit target. And it turned out the 2R profit target was basically break even after 100 trades, where the 3R profit target was up 15 times our risk after 100 trades. So that's why I thought this was essential to track these various profit targets. Now, one mistake I was making was if I took more than one trade per day because my 3R profit target didn't get hit. Let's look for an example here. I see one right here. Okay, on TUP. So look at these three rows right here, TUP. So this is a day where I took 3 trades on the same ticker symbol because each trade hit my stop loss before hitting my 3R profit target. But as I said before, I'm also tracking the 2R profit target, and notice that on the very first trade, it hit the 2R profit target. So here's an important thing that you have to know is that if you were just trading till 2R, you would be done trading there. Again, this is because that's the way my trading plan is written, is that if my profit target gets hit, I stop trading for the day because I don't want to turn a 2R day into a minus 2R day or whatever by continuing to trade. So what I was doing wrong before was I was tracking, okay, we hit the 2R profit target, and then if I took, say, trade number 2 and it also hit the 2R profit target, I would add that 2 there as well instead of a 0. And that's making it look like the 2R profit target made us 4R that day. But in reality, because of the way the trading plan is written, and I think this is a good way to trade, is that once your profit target is hit, you just stop trading for the day. So that's why these are zeros, is because if we were holding till 2R all or nothing, that's when we would stop. So hopefully that made sense to you. The other thing I want to show you is the results in Webull. So we are down on this trading plan about $61 at this point. Here is the average risk on each trade is 366, and we are down minus 10R with the 2R profit target. So it's actually beating the 3R profit target now. For a long time in the beginning of this trading, we were the 3R profit target was the only profitable profit target, but now it's lagging behind the 2R profit target. And you can see these higher profit targets, 4R, 5R, 6R, 7R, 8R, 9R, and 10R, are all well below the 2 and 3R profit targets. So those are definitely the winners, but they're still unprofitable. So this trading plan, if it continues this way, once we get to 100 trades, obviously it's going to need some tweaking if it can be profitable at all. So the last thing I want to show you is in the Webull account. So this is where we are today. So as I said, we started trading this on July 29th, and today is September 16th. So we're down. This shows a little less because it has our SPXL trades, which is the other trading plan that I'm testing. So you have to kind of subtract that number from there, and then you can see our numbers get much closer to what's on the spreadsheet. And other than that, I wanted to show you where, we stopped being profitable. So we started July 29th, and I think August 12th was when we hit our peak profitability. So there you could see that 55.02. And again, if SPXL is on here, yeah, you just subtract the 41 cents and you see exactly what we were up on the top gainers trading plan. So that's where we were peaked, and we were doing the exact same thing that we were doing during that period we're doing right now. And we are just no longer profitable at this point. We're down $59 and actually about $61 for the plan. And that's it. We're going to keep doing the same thing till we get to that 100 trades, because nothing is more important than trader discipline. When you set out with a plan, whether it be a trading plan for a single trading day or you're testing a trading strategy, you really need to see it all the way through. And that's one of the benefits that doing this will give you, is that it really ups your game in the trading discipline department, which you could have a bunch of profitable trading plans, but if you don't have the trading discipline to follow those plans, you're never going to be profitable. So to spend a little bit of money testing a plan that may not be profitable and you develop your trading plan, that's well worth it in my opinion. You're just not going to hit the ground running with trading and make money right off the bat. That's just not likely. So might as well come up with a plan that you think at least has a possibility of working out, and test it for 100 trades. And then at the end of that, even if it's not profitable, you'll at least have useful results that you can now modify and try to make it profitable and take another 100 test trades. So anyway, hopefully this video was helpful to you. Let me know if you have any questions in the comment section below. If it was helpful, hit the like button. If you haven't done so already, subscribe. And as always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit targets, and in the long run, you should be green. Take care.